Welcome to Talk Tickers. Today we're diving deep into the Elanco Animal Health Q1 2025 earnings call. We're here to pull out the essential insights for experienced investors like you.
And Elanco certainly started the year strong. They actually beat their own first quarter guidance pretty much across the board. Revenue, adjusted EBITDA, adjusted EPS all came in ahead.
Okay. And the core growth.
Yeah, the organic constant currency revenue growth, which kind of filters out FX and divestitures, that was solid, 4%.
4%. Was that mostly price increases?
Actually, no. It was interesting split right down the middle, half price, half volume, so 2% each.
Balanced growth then.
Right.
What about new products? They've been pushing innovation.
They have, and it's showing. New products brought in $198 million just in Q1.
Wow, $198 million.
Yep. And because of that strong start, they've bumped up their full year expectations for new product revenue. Now looking at $660 million to $740 million.
Significant jump. Anything else stand out from the high level?
Deleveraging. They're paying down debt faster than they thought. The target for net leverage by year end is now better, 3.9 to 4.3 times.
Good to see. And the full year outlook overall?
Well, they raised the overall revenue guidance, but
Yeah.
that's mostly because of favorable foreign exchange. The underlying organic growth forecast stays the same, 4 to 6%. They do expect it to accelerate quarter by quarter, though.
But no change to the profit guidance?
No, adjusted EBITDA and adjusted EPS guidance for the full year are unchanged. The main message really seems to be, look, our strategy is working, even with some, wobbles in the external environment.
Okay, let's unpack that revenue number a bit more. You said reported revenue was actually down slightly.
Yeah, reported was down 1% to $1.193 billion. But again, strip out the FX and the aqua business they sold, and you get that 4% organic constant currency growth.
Right, and that 4% came from both price and volume, 2% each. How significant is hitting that 4% right now?
Well, considering some of the challenges, especially we saw in parts of the tech market, getting 4% organic growth, balance like that, it suggests pretty good underlying strength and execution, I'd say.
Okay. Let's break it down by segment. Pet health is huge for them. How did that look?
Total pet health revenue was up 1% in constant currency. Price growth was 2%, so that was the main driver there.
But U.S. pet health specifically?
Yes. U.S. pet health actually declined 3%. Now, you have to dig into that number a bit.
Okay.
A big piece of that is comparing it to Q1 last year, when they had that initial sort of one-time distribution benefit from the legacy Bayer products they integrated.
Right, the lapping effect.
Exactly. Plus, they mentioned a tougher retail environment and maybe softer vaccine demand in the U.S. during the quarter. Those played a role too. But innovation sales did offset some of that.
So if you adjust for that Bayer comparison.
Yeah, they estimate that if you take out that Bayer impact, U.S. vet clinic revenue would actually have grown by about 8%.
That's a very different picture.
It is. And they also saw a really strong rebound in U.S. retail in March, up 13%. And they said the strength carried into April. Probably flea and tick season kicking in.
Okay, what about pets outside the U.S. international?
International pet health looked pretty good,
Yeah.
up 5% in constant currency. That was driven by products like AdTab, Cordilio, and Sesto.
AdTab's the newer flea and tick one, right?
That's the one. Its revenue more than doubled year over year. And overall, new products added about 2 percentage points to Elanco's total company growth. Zanrelia, the dermatology product, also did well internationally. Brazil, Canada, Japan saw good starts.
Let's switch to the other side. Farm animal health. How did that perform?
Really strong in the U.S., surged by 17%.
17%. Wow. What drove that?
Mostly cattle. Continued strength there, and they highlighted the rapid adoption of Expirier, especially after it got that FDA combo clearance. Seems like the market really responded to that.
And international farm animal.
More muted there. Up 2% organic constant currency. Ruminant products grew, but it was held back a bit by the Keystone recall and some changes they made to their commercial model in certain markets.
Did they quantify that impact?
They did. They estimated those two things, the recall and the commercial changes, created about a 4 percentage point headwind for international farm animal growth.
Okay, let's dive deeper into that innovation pipeline. $198 million in Q1 revenue is substantial.
It really is. It shows that Big Six portfolio they talk about is gaining real traction. That's why they raised the full year forecast for innovation revenue.
Can you give us some specifics? Zanrelia, the dermatology drug.
Yeah, Zanrelia. It's now in about 35% of U.S. vet clinics. That's around 11,000 clinics. They break it down further. About 8,000 are fully adopted, using it regularly, and another 3,000 are in the pilot phase.
And are vets sticking with it?
Seems so. Reorder rates are up to 70%, which is a strong indicator. And among vets not using it yet, about 26% say they expect to try it in the future, often mentioning seasonal allergies kicking in.
Any updates on the label?
They're working with the FDA. Expecting feedback on a short-term language change in the second half of this year, and they're doing studies for a more comprehensive label update long-term. Plus, as we mentioned, good launches outside the U.S., and they expect approvals in Europe, UK, and Australia this year.
What about Cordilio Quattro? That's the new parasiticide launched in January.
Yeah, Quattro. Early days, but the launch seems to be ahead of their own expectations. They're saying it's already grabbed about 10% dollar share of the broad spectrum market in U.S. vet clinics.
10% already. Why the strong response?
Vets are apparently liking the broad coverage, the speed of tick kill, and the fact it includes heartworm prevention. Elanco is also boosting the direct-to-consumer DTC investment for it and prepping for global launches.
And AdTab, the flea and tick product.
Still going strong. Doubled sales year over year in Europe, and they just launched it in the UK in April. They also made a point of saying there's minimal cannibalization of their other products, which is good news.
Any other key innovations making waves?
Well, there's the canine parvo monoclonal antibody. It's the first and only conditionally approved treatment by the USDA, so they're focused on getting that out to more vets.
Okay. And back to farm animals. Expirier.
Expirier for cattle, yes. Adoption is really taking off, especially in heifers, since that FDA clearance grew 200%. They think the market potential in the U.S. and Canada could be over $350 million.
Huge potential.
Yeah, and they plan geo-expansion in the second half. Then there's buffer dairy. Demand is strong there too. Number of cows on it doubled since just February.
Yeah, right.
Adoption and margins have been hit a bit by delays in some government incentives. They're working on that, plus label expansions and cost reduction efforts.
Got it. Now, tariffs are always a worry for global companies. What's the situation for Elanco?
They're estimating a hit of about $16 to $20 million to adjusted EBITDA this year from current tariffs, mostly U.S.-China stuff.
So does that lower their guidance?
No. Interestingly, they said their Q1 outperformance completely offset that expected impact. So the full-year adjusted EBITDA and EPS guidance stays put.
What about potential future tariffs? There's always talk.
They've modeled that too. They see a potential extra risk of $10 to $30 million if the current pharma exemption goes away and tariffs of, say, 5 to 25% come in.
How would they handle that?
They believe they can offset that risk too, mainly through expected favorable FX movements and some targeted value-based price increases. Plus, they're working on supply chain optimization, inventory management, tactical pricing, the usual levers, sourcing strategies for APIs too.
Okay, moving down the income statement, profitability, gross margin.
Gross margin actually edged up slightly, just 10 basis points to 57.4%. They credited price, manufacturing performance, and product mix for that. But inflation and FX headwinds did eat into it a bit.
And operating expenses.
No.
OPEX.
OPEX was up 3% year over year. That was planned, mostly investments behind the new pet health launches and R&D. They are flagging a bigger jump in Q2, though expect about an 11% year over year increase then.
Just for Q2?
Yeah, but for the full year, they expect OPEX to be up around 6% in constant currency. So Q2 looks like a peak investment quarter.
And the debt picture. You mentioned deleveraging.
Right. Interest expense dropped quite a bit, down to $40 million from $66 million last year. That reflects the debt paydown.
Yeah.
Adjusted EBITDA landed at $276 million. Now, that's down from last year, but if you exclude the Aqua divestiture and FX...
It was actually up.
It was up $8 million on that basis. Yeah. And adjusted EPS improved too, up 3 cents year over year to 37 cents.
And the balance sheet.
Net debt ended Q1 at $3.93 billion, putting the net leverage ratio at 4.4 times adjusted EBITDA.
So let's recap the updated guidance for the full year. Key changes.
Okay, so organic constant currency revenue growth target, still 4 to 6%.
Yeah.
But they raised the reported revenue dollar range because of that favorable FX, adding about $65 to $70 million there.
But profit guidance unchanged.
Correct. Adjusted EBITDA and adjusted EPS ranges are the same. The big news on guidance, I think, is the cash flow. They now expect $450 to $500 million of cash available for debt paydown in 2025.
Which leads to that better leverage target.
Exactly. That improved cash flow expectation is why they now see year-end net leverage between 3.9 and 4.3 times adjusted EBITDA.
And what about Q2 specifically? What's the guidance?
For Q2, they're guiding for organic constant currency revenue growth, again, in that 4 to 6% range.
Yeah.
Reported revenue expected between $1.175 billion and $1.195 billion. Adjusted EBITDA, $200 to $220 million, and adjusted EPS 17 to 21 cents. And they specifically said minimal tariff impact expected in Q2.
Okay, last piece. The macro environment. What was their take?
They acknowledged that January and February were a bit soft in the U.S. retail pet market. They put it down to cold weather impacting shoppers. But as we said, March and April bounced back strongly.
So they're not overly concerned about pet spending.
Their message was more that they see themselves as an execution story, less dependent on overall pet visit numbers, more driven by their own innovation and their omni-channel approach. They also pointed to strong trends in animal protein, meat consumption globally, which obviously helps their farm animal business.
All right, makes sense. Let's pivot to our This Is Not Financial Advice segment. Based on this deep dive, what's an outrageous but plausible trade idea?
Okay, here's one playing on that farm animal strength, specifically Expirier. Given its rapid adoption, the 200% growth post-clearance, the big market potential they flagged over $350 million and the planned expansion.
Right.
How about this? A focused long position on Elanco, but really as a bet on the continued, maybe even accelerating success of Expirier in the U.S. and Canadian cattle markets.
So not a general animal health play, but specific to this product's rollout.
Exactly. You're betting that the market is underestimating just how big Expirier could become for them, especially as it expands geographically. It capitalizes on that specific innovation strength within a segment, cattle, that's currently doing well.
What are the caveats, the outrageous part?
Well, the risks are execution stumbles, maybe slower than expected adoption in Canada, unexpected regulatory hurdles, or even sharp downturn of the cattle market itself. It's plausible because the initial data is strong, but outrageous because you're isolating one product's trajectory as a major driver for a large company stock.
Interesting angle. Okay, that wraps up our deep dive into the Elanco Animal Health Q1 2025 earnings call. We've hit the results, the innovation, the financials, the outlook.
A lot to digest there. Innovation definitely seems key to their story right now.
Absolutely. And remember, everyone, this analysis is purely for informational purposes. It is absolutely not financial advice. Please do your own thorough research.
What stood out most to you? Any questions still lingering? Dig deeper yourself.
Join us next time on Talk Tickers, where we'll break down another key earnings call to give you that edge.